Hello folks, you're welcome to the new week commentary for the dollar and foreign currency. Don't forget to subscribe to this YouTube channel for more interesting videos and turn up your notification bell to stay updated every time I post a new video. So this week we're going to look at the analysis for the dollar, my top-down analysis for the dollar index and foreign currency. Reason is because the dollar index is the benchmark asset for all dollar and dollar associated currencies. So we need to know what the dollar is saying before we can start taking trades on foreign currency. And simply would start our top-down analysis from the weekly time frame this time around, because the higher time frames are the main drivers of price action. That is where institutions are positioning their trade and orders. So we'd like to know what the higher time frame trend is so that we can position ourselves in the direction of the higher time frame, because the trend is your friend. If you are ever going to make money trading forex, you have to get used to trading in the direction of the higher time frame trend. All right, so previously we see that price is bullish. Price action has been forming higher high, higher low on the weekly time frame. Price traded into a bearish mitigation on the weekly time frame, then created a displacement lower into a discount level between this current trading range, the low here to the high there. You see that 50% of that range is called equilibrium. Right now, price is below 50%. If you just put up your Fibonacci and measure between the low to the high of that range, you see that right now, price traded below the 50% of that range, traded into a discount fair value gap on the monthly time frame, and on the weekly time frame, price actually traded into a previous volume imbalance that was violated right here. Price traded to tap into that volume imbalance, and guess what we see here? We see the dollar, after some level of accumulation of order, the dollar swept relative equal lows. Right here we see the dollar swept equal lows, took our liquidity, and is finding support at the volume imbalance on the weekly time frame here, okay, which is at the same time in a discount level and also within the monthly time frame fair value gap, or the buy side imbalance, sell side inefficiency. So price action created a new market structure bullish, shift of structure bullish, traded down into the bullish order block with a fair value gap attached to it. Remember that the most valid order blocks are the order blocks that have a fair value gap attached to it. So this is a large candle order block because the sell candle is quite very wide and long. So we see the last sell candle that was traded through by consecutive buy candles to form the bullish order block. When you measure 50% of that bullish order block, is called the order block mean threshold and is in confluence with the fair value gap. You see that price traded into that fair value bullish order block with a fair value gap after shift of market structure bullish, then created a swing low, 3 candle price action with the middle candle having the lowest low. That is a strong reversal pattern, a bearish or bullish reversal pattern. This is telling us that we're about to start trading higher, because we see a swing low formed right in a discount area, and also after trading into a bullish order block. You see that the 3 candle, middle candle having the longest wick, and price action started to form higher high, higher low, higher high, higher low. Then we see that in previous week the dollar consolidated for a while, and just last week the dollar traded below the relative equal lows right here and is finding support on a bullish order block on the weekly time frame. You see that the bullish order block with a fair value gap after price took out the sell side liquidity pool residing below that relative equal low. Remember, all the times I emphasize that one hack to identifying drawn liquidity is to identify the liquidity pool and a fair value gap below it, or an institutional reference point below it for sell side drawn liquidity. And if you want to identify buy side drawn liquidity, identify relative equal highs, old highs, and a fair value gap above it, or any institutional reference point above it. That is a quick hack to know where the drawn liquidity is headed. Okay, so right now we see that the dollar took out those relative equal low, is sitting on a bullish order block on the weekly time frame with a fair value gap, and is showing a rejection. You see that the body of the candle closed above. This is telling us that market structure is still bullish on the weekly time frame. Order flow is still bullish. Where is the drawn liquidity? I see relative equal highs, or better still, is called the low resistance liquidity run, because we see price action created 3 consecutive highs. All right, failed highs. Trend traders would call this diagonal liquidity. So we see this as diagonal liquidity, and we're looking to see price action trade above all of this low resistance liquidity run and trade into the sell side imbalance, the buy side inefficiency. This is also in confluence with the seasonal tendency chart. The seasonal tendency chart for the dollar shows that we're anticipating to see some level of bullish repricing on the dollar index starting from towards the end of July and going into August, and even mid-August we anticipate to see some level of bullish price action on the dollar index before the dollar finally crashes into the October contract for the dollar index seasonal tendency chart for the previous 33 and 15-year chart. If you don't know or how to read the seasonal tendency chart, I think you should go down to one of the videos I did on this channel about the seasonal tendency. Go and watch that video. I clearly explained how to find and how to interpret the seasonal tendency for the dollar and any other currency that you're trading, so that you know what the dollar is most likely going to do from previous data that has been accumulated over a year of 33 years and another 15 years. You can use that to give you an insight on what is the most likelihood of what the dollar is going to do. So this is what I have on the weekly. I can see clearly that on the weekly time frame, structure is still bullish because price took out relative equal lows, shift of structure bullish, retraced into bullish order block, forming higher highs, higher lows. Now we see price accumulated or consolidated for a while here, then took out sell side liquidity pool and is sitting on a bullish order block. The drawn liquidity will be above this diagonal liquidity, and ultimately this is the drawn liquidity, the low of that sell candle and the high of that candle. That is a sell side imbalance, buy side inefficiency. On the daily time frame, we like to see market structure supporting this idea, so we like to see bullish market structure starting from this point. And if you look at also the daily time frame, price action took out that relative equal lows here and is sitting on a bullish order block mean threshold. The last sell candle that was engulfed by 2 buy candles, you see that when you measure 50% of that sell candle, because the candle is also a large candle, 50% of that sell candle, that is the order block mean threshold. Price action traded into it and formed swing low. Remember, swing lows and swing highs are reversal patterns, candle reversal patterns, candlestick reversal patterns that tells us that we're about to start reversing. So we see price action form that swing low, 3 candle, the middle candle has the longest wick and is headed upwards. Right now we see price action already created a bullish order block. So we have a bullish order block that formed after price action traded into a bullish order block on the daily time frame. What are we waiting for? Just 2 scenarios. I see possibility of 2 scenarios. Price action is going to most likely create shift of market structure above that old lower high there. Then as we retrace into the bullish order block, we start looking to buy the dollar into the weekly and the daily drawn liquidity that we outlined there. Okay, that is what I'm looking at on the daily time frame. It's going to be my high probability trade setup for the dollar, and if the dollar is ready to start buying, we will start selling foreign currency. Okay, another second alternative is that the dollar may still ignore shift of structure yet and may clearly retrace into the bullish order block. Then once we see a 1 hour shift of market structure within the bullish order block, we can start buying the dollar into this level that we outlined as the drawn liquidity, and ultimately the CB residing above that diagonal liquidity. This is my anticipation for the dollar. Then the 1 hour time frame is where we create, or it gives us the setup, the trade setup. We usually frame it on the 1 hour and we take executions on lower time frames like 15 minutes. So another alternative is that price action is most likely also going to do something like this, because we see price action has just returned into a bearish order block here and has just grabbed liquidity above that high. So in the new week, if we see price action trade below the relative equal lows here, or the relative lows there, and trade into this bullish order block on the 1 hour with a fair value gap. This is also within the daily order block. You see that order block with previous fair value gap that was violated will now serve as resistance turn support. So once we see price here, we can start buying the dollar into those levels with confirmatory signatures on the 5 minutes and the 15 minutes time frame. All right, guys, this is my anticipation for the dollar. Until the dollar is ready, we are not interested in buying or selling any foreign currency. Don't forget to like this video, drop your comment, let me know what you think about this video, and don't forget to subscribe to this YouTube channel. And those of you interested in joining our premium mentorship program, myself and Solomon King, the Elite Traders program, just check the description of the video. You are going to see a link that directs you on how to sign up for our premium mentorship program, where you get to see our trade setups every single week, and you're going to have access to our weekly commentaries twice every week. We have commentaries with the students from the mentorship, and you're going to enjoy that experience. Until next time, I wish you good luck, good trading, stay safe.